Hope you all are seeing my screen. Hello?
No, I can't see your screen.
Not yet. Yeah, you can see it now.
I can see now.
Right.
We can see it now. Wow.
All right. So you can see the market is crashing. Market is dumping heavily. Market is dumping. So tonight we are going to discuss about Fibonacci. Fibonacci is a tool developed by Leonardo Fibonacci. It's a mathematical tool anyway. That is very, very important in the trading world. In fact, most traders use what? Fibonacci to find the retracement, the next retracement that price will make in the markets. You know, the next push or the next impulsive move that price will make. We use Fibonacci to what? To track the movements of price. I'm looking for the notes that the note that I made on Fibonacci. That's the small note that I made on Fibonacci. You know, I'm a practical based man. I don't like too much theory. You know, I'm practical based trader. So how hope you guys are enjoying my class, or is there anything that you're finding difficult? Am I too fast? Yeah? Hello?
Yes, sir.
Go on, we are getting you. Go on.
Okay. Hope I'm not too fast. My class is not that
Not at all from our hand.
okay. All right. So tonight we are going to discuss about Fibonacci as a tool, as an important tool used in tracking what? In tracking retracements.
Okay.
So Fibonacci is a level of retracement the market makes, or Fib is a level of what? Retracement that the market makes. Fib is the level of retracement that the market makes. After a big move. Fib is the level of retracement that the market makes after a big move. Either uptrend or downtrend. The major retracements are what we call PRZ, price reversal zones. The major retracements are what we call price reversal zone. The major retracement are what we call price reversal zone. They are 38.2%. I'm in the class, don't disturb me. 38.2%. 61.8%. That's they are the PRZ zones. 38.2%. 61.8%. 78.6%. Go now, go away. You came Sinachi. 78.6%. And 88.6%. So you can call them the primary numbers of what? Of fib. They are the primary numbers of fib. They are the primary numbers of fib. Full stop. If the market is rejected at 38.2, if the market is rejected at 38.2%, it moves or spike faster to sell zone. It moves I'm just looking at this FTM to short FTM.
Please, can you take the last sentence again?
Okay, I said if the market is rejected at 38.2%, it moves or spike faster to sell zone. Like we have, okay, I will come in after making my statement. Then I will show you how to do. I will show you how to prove Fibonacci. That's it moves or spike faster to sell zone than when it rejects at what? 61.8, 78.6, and 88.6 of fib. You know, for short, we call it fib, F-I-B, fib. The main one is 38.2, which is more of an aggressive push. You know, when price hits 38.2, the move is always aggressive. It's always aggressive, whether you are buying or you are selling. The move is always aggressive. When it breaks past 38.2, it pushes down, it pushes slowly down to the upside. It pushes slowly down to the upside. You know, you can as well support fib. Note, you can support fib with support and resistance. You can support fib with support and resistance, just like we have here. Just like we have here. You know, this place that supports. Supports. The red lines are the supports.
Sir.
Yeah.
So please, I have a question.
Okay.
From your chart, as I'm seeing, you're on a 15 minutes time frame, right?
Yep.
There was one of the classes you said if you are using the 15 time frame, you should use higher time. You should use it means you are drawing a resistance on the H4 time frame, and then H1, and then use the 15 minutes to confirm.
Yep.
Is that what you actually said?
Yes. I'm waiting for entry. I've been doing my analysis on H4.
Okay.
You understand? So
yes,
I'm
sir.
currently waiting for entry. I'm currently
Okay.
waiting for my entry.
So it is H4, H1, and H50 and 15 minutes.
Yeah.
All right. Thank you, sir.
Yeah, you can do from daily. From daily. You understand? Look at the daily closure here. This candle now didn't close. This bullish candle didn't close above this.
Yes.
And even this candle closed above this.
It will be a buy.
It will be a buy. But price failed to close above it. So now you can see that our 21 moving average is well respected. You can see there was a rejection there. And this is a what? This is a channel called bearish rising wedge. This is a wedge, right?
Yes, sir.
Yeah. So definitely price just broke out from this channel. Are you with me? So it's,
yes, sir,
it's currently retesting. It's currently retesting. So I'm trying to find my entry on M15. I needed a sniper entry.
Okay, sir.
So my take profit limit is at 0.6581.
Okay, sir. So if you close it with the morning star, you enter.
Yes. So I'm just looking at it. So
okay, sir. Thank you very much.
For an uptrend, you measure the level of retracement or a move from the low to the high. That's if you are going uptrend. If you are going uptrend, you measure from low to high. From low to high. For an uptrend, you measure the level of retracement from low to the high. From the low to the high. And for downtrend, you measure from the high to the low. That's the measure from this previous swing to the previous low. Previous swing high to the previous swing low. Just like I have here. Just like I have here. This is my previous swing high. This was my previous swing low. So, what are the price reversal zones that I mentioned? What are the price reversal zones that I mentioned? Who can give me the price reversal zones that I just mentioned?
You said 38.5 and 78 and 68, sorry, or 61.
What? I didn't get you.
You said 38.
At 8.2.
Yeah, 38.2 and 61.8.
Okay. Not only that now.
Measure the 78.6 and 88.6%.
Okay, 8.6%. But that is how every trader set their own Fibonacci. You understand? Some traders don't look at what 38.2 is doing. You understand? What they look at for is these two. You see these two? This red line here. When price is on these two, it's on this red line, definitely price will reverse back. You understand? There will be a move when price touches these two red line. You can see my own color is red. You can see that price dropped at what? Price found resistance. On looking at this chart now, you will see that what? This place is the what? This is the support level. Are you with me? So price broke this channel here, found support here, then it's retesting now to warm up again to try and see if it will break this support here. Are you following? Hello?
Yes, sir, we are following.
So there was what? A retracement on this 50%. You understand? So now that what? Price broke out from this place, found support here, now went back to retest again to warm up. You know, whenever I say retest, you understand, at a crucial point, price just went back to see if it will gather momentum again and maybe to try again for the second time to see if it will break here. And whenever price breaks this particular point, the next point that it will touch is 38.2. Once price hits this at 8.2, you will see the momentum of the push. It will push heavily. Are you following? It will push heavily to what? To this point. To this what? Support level here. Once price breaks here, then this green line here are my TP levels. I can put TP1, TP1, TP2, TP3. They are my TP levels. Are you with me? So the PRC zones that we have are what? 38.2, 61.8, 78.6, 88.6. I didn't put 88.6 on my fib. I didn't put 88.6 on my fib. Going by my settings. Let me show you how. Look at how my settings is on Fibonacci. Look at how my setting is on Fibonacci. If you want to get Fibonacci, look at Fibonacci 2 here. Look at fib retracement. Are you following? Are you watching my screen? Hello?
Yes, we are following.
So this is my what? This is my fib retracement here. Then if I want to get these settings, you will click on the what? On the fib. Click on settings. So you can screenshot this. Screenshot this. Have you done that?
Yes, we have.
Okay, let me scroll down. So I didn't mark all these numbers here. All these ones, I didn't mark them. The most important ones are these.
Please, I have a question.
Yeah.
Does this settings work for any chart?
You said?
Does this settings work for any chart?
Yes, any chart at all, any chart. Any chart that you want. If you want currency, if you want, what is it called? Crypto, stock, Fibonacci is Fibonacci.
No, I mean the settings, like how you've configured yours.
Yeah. It works on any chart.
Okay.
If I open BTC, it works here too.
Sorry, you mean it works on any time frame?
Any time frame of your choice.
Okay.
You can see.
Can I see the way you do it with a downtrend? I didn't understand that.
Okay, for downtrend. For downtrend, yeah, you draw your Fibonacci from up. From up to down.
So you'll be picking the
from the last swing high to the low.
Okay.
From the lower high to the lower low, the last lower low.
Using the wick or the candle?
Using the wick.
Okay.
You can see on BTC, price is trying to reject at what? At 61.8. Price is trying to reject here at 61.8. All right. Let's go. There are some other PRZ zones, but those ones are not that important. Like 26, 23.6, they are not important to me. They're not important to me. I use the most important ones. Market structure. The most important one is 38.2, 61.8, 78.6. 50% also is also okay. 50% retracement is also okay. It's also okay. But you can't count it as a price reversal zone. But whenever price approach that, it will still have effect. It's either 50 or 61.8 for price to reverse.
So it's 38.61 and
38.2. 61.8. 78.6.
Oh, thank you.
88.6.
Oh. Thank you, sir.
All right. So, all these things, like I said earlier, that Fibonacci is not an indicator. Fibonacci is not an indicator. It's just a mathematical tool that you use to find price retracement or retracement points. So, and it gives you what? It gives you a confluence also. You understand? When combined with other technical tools, it gives you a confluence. When you combine it with what? Other technical tools like support and resistance. Are you following?
I missed that one. I'm not getting it.
I said, like it gives a confluence. You understand? When you add them with what? Other technical tools, like support and resistance, like supply and demand, like chart patterns, like candle analysis. You understand? So it will add a spice for you to know where price is heading to, the next move that price will make. So that's the essence of using Fibonacci. There are some points whereby maybe price will make their all-time highs. So how do you locate the next move that price will make from the all-time high? It's through Fibonacci that you will know the next point. You understand? All you need to do, as price is heading up, giving you higher highs, higher low in an uptrend, you just measure the last swing low to the last swing high. It will give you the next what? It will give you the next retracement point. Are you following? Hello?
Yes, yes.
Am I too fast? I said, if you are going higher highs, that's if you are going in an uptrend now, as price is moving uptrend, it will be showing you what? You'll be seeing at least patterns being repeated. You know, price will be forming what? Higher highs and higher low, higher highs and higher low, higher highs and higher low. So if price gets to all-time high, for example, then how do you now determine the next step that price will make if it breaks what? The last resistance point? How do you determine that? You use Fibonacci tool to determine the next point, the next retracement point that price will make. All you need to do is just to what? Place your last swing low, which is the higher low, right? You place your Fibonacci, your 100 from the last swing low to the last swing high, which is that one, from support to the resistance area. Are you following? Then anywhere the negative, anywhere that the negative 27% touched, that will give you the next retracement point. So if that negative 27 breaks, the next take profit area will be what? Negative 61.8. Which chart now will I use to give an example? You can see that BTC is dropping. So this now is what? This is a higher, this is a lower high. This is a lower high for further what? Lower low. This is a lower high for further lower low. I'm looking for something to give you an example. I'm looking for a clean chart to give you an example. Now I said if you are going uptrend, you measure from the low to the what? To the highs. That's if you are going uptrend. If you are going downtrend, you measure from what? From up, the highs, to the what? To the lows. So if you look at this diagram now on H4, you can see our 50% retracement was made at 42,842, which is at this particular point. Price made a retracement at this particular area. So now that the price made a retracement from what? From this area, which is the 50% retracement. You understand? Then our take profit area is what? 34 point what? 34,445, which is this place. That's our take profit point. You can see another take profit point is what? 30K region. I see my chart, please. I see my chart. I see my chart.
Yes.
Hello.
Yes.
So for me to measure the next TP point of BTC, now that BTC is ranging, so sorry, now that BTC is out of range, for me to measure the next TP point, the next place that BTC will get to is what? Just place my Fibonacci on the last swing high, this last swing high, which is the lower high, to the last what? Swing low. The last swing low. You can see that what? My TP is within this zone. So that is how to use Fibonacci. You can use it to also determine your TP points. Are you following? Is it confusing? Hello, are you confused?
Please wait. How to
Yeah, we are still trying to
the
figure it
string
out.
highs. The string
Yeah.
highs is pretty confusing. And the lows, like how to draw it.
I started this class with market structure. Right?
Yeah.
I started this class with market structure, and I touched Fibonacci a little bit. If you followed my class, I did Fibonacci. I said, as price is making what? Is making this now, for example. For you to ask this question, that means you didn't follow up my class now.
So I've been following, but this is pretty confusing.
Upward trend with the high highs and the low lows.
So as price is making this now, you understand? Giving you your swing points. All these areas are the swing points. Higher highs, higher low, higher highs. They are the swing points that price makes. You understand? So for you to go use Fibonacci on this point now, you measure from the last swing, which is the higher low. Eh? Here is the higher low. You measure from here. From here to here. For example, from here, from the higher last low to the what? Last high. So if this price now falls within what? 50 or 61.8, that means it's a strong what buy. You buy from this particular area here to what? To this place. Don't mind my drawing. My drawing is not that good. It's not touching this area. If price
Sorry, you draw from?
You draw from the high, from the higher low, from the higher low to the higher highs that price made. You understand? So This entry point now will be within 50% or 61.8. Are you following? Then our TP will now what? Will now be here. Our TP will now be here between negative 21% and what? Negative 61.8. Then if I want to measure another move that it will make, for example, I will measure from here. You know, I can still measure from here to this place. From the last low to the last high. From the last low to the last high. That's how to use Fibonacci in an uptrend. But if it is downtrend, you measure from the low, from the lower high to the lower low, the last swing low that the price made. Are you following? Look at where my 100 is. My 100 is below here. Why this now? My 100 is at the top. Just like what happened here that I'm trying to short FTM. I'm trying to short this FTM now. You can see that FTM is dropping. FTM is dropping. Are you with me? So this place now is a lower high. This place is a lower high. Hello?
We are here.
Today you're a bit confused today. What happened? You guys are a bit confused.
Oh, it was a holiday here.
Just understand the scenario. Just understand the scenario here. If you are going from, if you want to measure the next retracement, if you want to measure the next move that price will make, all you need to do is what? If you are in an uptrend move, you measure from down to up. Since you are going up, if you are going down now, you measure from up to down. Just like I have here. Look at where my 100 is situated here. The last swing high to the last swing low. Are you with me? Hello? Hello?
We are with you, sir. We are here.
Getting it. Yeah, getting it.
Are you sure? Are you sure?
Yeah.
Are you sure you are getting the point?
I'm getting it gradually.
It's not. This
You
thing
will
is
be
not
there through repetition. You will get there, my dear. Don't worry.
This thing is not difficult. It's not difficult. It works on any time frame. On any time frame of your choice. You understand? Market is going down. So all I will be doing is just for me to use my Fibonacci to track what the next retracement points. That's all I need to be doing. Until I get to the lowest low. Are you following? So they said.
So once you drag, so in other words,
you said?
Once you drag from the top, if the trend is going down and you drag to the bottom, does it show you then where it will end, or what will it be showing you? I'm confused. Sorry.
That's when you draw from up to bottom, right?
Mm-hmm.
Then you'll be watching the numbers, those numbers that you are seeing. Remember, you are trying to find out the next retracement points. So once price hits negative 27, that is the next retracement point. You understand? So all I need to do now is what? Is to move my my Fibonacci. Start from where? From here down again to track that negative 27. It will still give me the next point that it will make.
Okay.
So just be locating the last swing point. The swing points are the what? If you are going in an uptrend, the swing point is the higher low and the higher highs. Those are the swing points. Those are the swing points. Then I told you guys that if you want to make your entry, where do you make your entry? If you are going in an uptrend position now, where will you make your entry?
Not true.
Hello?
You can hear you. Not true.
You will make your entries at the higher lows. At the higher lows, that's where you make your entry.
Okay.
Then you take profit at the higher highs.
So from Fibonacci, which figure would you make our entry?
You make your entries at what? At 61.8. Mind you, it's not negative 61, no. 61.8.
51.8.
You can still make your 61.8. You can still make your entries at what? At 50%. You understand? You can still make your entries at 60%. But whenever price touches what? Touches 38.2, that means there will be aggressive pump or aggressive dump.
If it reaches what?
38.2. Price moves impulsively when price touches what? 38.2.
So at 38.2, you expect an aggressive dump.
An aggressive move.
If it's in the uptrend, it will be an aggressive move to the upside.
Whether uptrend or downtrend. Once price touches 38.2, you will see that the move will be different.
38.2.
Yes, the kind of long candle that you will see. Eh?
Okay.
Okay.
Are you okay now?
We will be there through repetition. Don't worry, say.
I'm getting it.
Repetition is the best way to learn. Keep on repeating.
Yeah. Repetition and constant practice.
And practice and reading. Because through practice, you'll be repeating.
See, I'm always there. We are always there to help you, to guide you. Whenever you encounter any difficulty. Are you with me? We are always there. Just feel free to inbox us.
Okay.
Feel free to come to our DM whenever you encounter any problem. Today, I was dropping how to manage portfolio. But since yesterday, I've been giving you guys how to manage so that you will not make, you people will not make the mistake that we made.
You know what, say? We are also making the mistakes you made. When we are teaching others, we'll be saying, don't make the mistakes we made. That's the name of the game. Don't worry.
you know, the mistake that we made, most of us bought coins at all-time high.
That's what we have done already. You are saying it, but we did it. That's why I'm saying now we'll be telling others. History repeats itself.
So in crypto, this is the best time to buy. This is the best time to buy, but people don't know. People are waiting. You know, some now that are yet to invest in crypto, they will see in crypto. You sell when there is hype. When there is too much hype, you sell.
And by the time you are telling us it's time to buy, we have finished the money buying high. That's why I said we'll be history. Now we'll be saying, you'll be busy in the group saying buy, and Silent will be saying, with what? With what? The money is finished. And you did it also, I know.
I made huge mistake. You know, today I took my time today to, you know, to dig into what the portfolio of whales, you know, to track what they are doing, the kind of investment, what they are buying into. You understand? And I realized my mistake. You know, these guys, Like people that want to, maybe you're just starting crypto and you have $1,000 to invest. Some of us went to carry BTC. You understand? We carried Ethereum. All these big market cap coins. They will not pump. Their movement will slow. You understand? So those ones are being used to reserve what? To reserve money. You understand? So if you want to build up your capital, you find what? You go for low cap coins that you know that they can pump easily. S10, S20, S100. So those ones will give you money. You understand? To now invest on what? On solid projects. You can remember when Shiba pumped, right? Hello?
We are here.
So you can remember when Shiba pumped. People were using $100 to make what? To make thousands of dollars, to make 10,000, 20, 40. I bought Shiba for someone, you know, that time I didn't believe on that project. So I bought Shiba for somebody, $700 worth of Shiba. And Shiba pumped and the person got $45,000.
Oh.
You understand? Just that the person was greedy.
What duration?
From 700 to 45,000, just within a month. Within some weeks. You understand? So just that the person was greedy. I told the person, take this money and invest on solid project. The person said no, that Shiba will cancel multiple zeros. At the end of the day, what happened? People now use her as exit liquidity. You understand? When she realized what is happening, that money dropped to 10K. From $45,000 to $10,000. So you invest on projects that you know that yes, they can pump easily. Their market cap, they have low market caps. Then when you now make the money, let's assume now that you made $300,000, for example, $300,000, for example. What will you do as a trader? You know how to manage your money, right? You know money management. You reward yourself.
I will not trade again.
No, not you will not trade again. You will trade.
No, so I'm not trade. 300. My life have changed. I'm not trading again.
You will still trade. You will still trade. But what you need to do is just to be what? You will trade with what? You will reward yourself, right? You can say, okay, let me reward myself with $100,000. You go and buy your land, build your house, right? Get your car, you know, you've rewarded yourself. Then you now use that 200 that is left. You can decide, okay, what will I do with my $200,000? It's okay. 40% should go to stable coins, right? Stable coins must be, you must have stable coins always, like 40% of it. Because it's with that stable coin that you can purchase any coin of your choice when the price is down. Then you say, okay, I need to have blue chip projects on my portfolio. Then when you talk about blue chips, you look at BTC, right? They act like reserve money. You look at BTC, you look at Ethereum. They are what? Blue chip. You look at Luna, you look at Avas. They are blue chip projects. You buy them. Then you now look at medium term, as in the ones that have what, moderate risk or low risk. Moderate, let me use moderate risk. The low risk ones are the blue chip. So you go for moderate risk. Coin like FTM. FTM is a very good moderate risk coin, a project. You go for Atom. You go for NIA. Are you with me? So all those ones are what? They are, you go for FSS. They are very good what? Low, medium risk projects. You go for them and buy them because they can pump, they can easily pump. You know, you measure them out according to percentage. Then you now go for the what? For risk. Risk, like this Mana, Sand, Gala, IMS, you know, they are all what? Risk projects. They are good, but they are risk projects. You buy them and keep so that when they pump, you what? You pull out your money and invest. So that's how to, you know, go about managing portfolio. Always buy when the market is there. Always buy when there is fear in the markets. So as price is crashing down, you deploy your armory, deploy your USDT using DCA method, dollars cost averaging method. You deploy them and what? And make money. Then during bull market, as market is making bullish move, you will relax and not be laughing. Your portfolio will be, you know, will be turning green upon green, green upon green. So this is the time to do what? To plant the seeds. You plant seed now to do what? To harvest in the future. You don't plant when people are harvesting. Am I making sense?
Yes, sir.
So you don't plant when people are harvesting. So plant now when people are sowing the seed. Follow them and sow your own seed. Not when price is making all-time high, you go and buy. When you buy there, you will become an exit liquidity. So let's continue. So remember I said that if you want to sell, you sell at what? At the resistance area. You sell what? At a resistance area. You don't buy at a resistance area, please. Never you buy at a resistance area. Just like I have my FTM here. Just like I have my FTM here. Did I buy at this place? No. I sold from what? I sold from a resistance area here. Here is my resistance area. So I sold from here to take profit at this place. So that is how to trade, my people. So you can use Fibonacci to do what? To track retracement moves. To track what? Retracement move. Are you with me? Hello?
Yes, sir. Yes, sir.
Are you with me? So Fibonacci is just for you to catch retracement. That's what we use Fibonacci to do. That's just what we use it to do, nothing else. We don't use Fibonacci for merriment. Just to catch what? Just to catch retracement move. If price is going up, you start from the bottom, which is the what? Locate the last, the swing low, then to the swing high. Here is the swing low. Here is the swing low. Here is the swing high. Are you seeing it? Here is the swing low. Here is the swing high here. You can see that price dropped at what? 61.8. Are you following? Just inside this channel low. From low to high. This is how I drew it. From low to high. From here towards to here.
Start that drawing. Let's see. Sorry, I missed it.
Okay, let me start again.
Yeah, it's so difficult to learn on the phone, you know. I wish I had a laptop. The phone, so squashed.
So from here, I see my Fibonacci from here to what? To here, to this place.
Okay.
So
Tell me something. Tell me something.
Yes.
What happens if you start from there where you started, right up to where the uptrend is going to the, and there where there's like a double top there?
Okay. Let's move our Fibonacci to that place and see what will happen. You can see that price pulled back from here for 50%. Are you following? Price pulled back from here now. There was a pullback from here to here, but mind you that this is a channel. Price broke from it, so it's looking for a retest. Are you with me?
Network is starting to be jealous now. Yeah, the network is cutting me, but I can hear you.
Okay. So this is just simple. It's just simple to use. It's just simple.
Yeah, I'll try and practice it.
Maybe it's not always that you bring out your feed. Some people don't. They hardly use feed, but whenever they are confused, they bring out their feed to catch the next replacement. Are you with me?
Especially in all-time high.
Yeah.
Right? Okay.
Yes.
Okay.
So all-time highs is we are not in all-time high now. Every coin is tanking with pace. Let me see if I can measure this one from here to what? To here. You can see this price now is still within what? 50%. And is on a resistance, is on support. Look at it here. Are you with me? Are you with me?
Yes.
So you can see that what is still respected what the support and resistance line. So once this 50% fail, definitely it will bounce here. It will bounce 61.8. You can see our TP levels. You can see where this is the first TP. This is the first TP, right? I can say this place now is a TP1. Here is TP2. You can see our negative points. Negative point 27. Negative 27 is still at a resistance area. Are you seeing it? Then 61.8 is within this area. So they are all what? The take profit are on the resistance areas. Then on heading down, we move from here to what? We move from here. Where is the last swing point? Where is the last swing point? Okay. Are you seeing this week here? From up down here to this place, this is the pullback. 61.8. Price is on 61.8. Right? This is the first swing. This is the first swing that price made. Here. So you can see that it's on top 61.8. Then let me move from that point. From this point to this point. So price is still within. Price is still within 61.8 and 50% Fibonacci. Are you following? From here to the low, is still within this zone, right? Hello?
Yes, sir. Yes, sir.
Are you seeing how it's respecting the place?
Yes, it's respecting it clearly.
So that is how to use Fibonacci. You can't use Fibonacci inside channel. Inside channel, it will be hard for you to track. Look at it. You can't use Fibonacci inside channel because this is a ranging market. So Fibonacci is very easy, very easy. Just that this is the first time of hearing it. So it will sound strange to you. It will sound strange to you for now, but constant practice will make it to be a bit clearer. I'm looking for where I wrote down something. I can't find that thing. I'm looking for where my note is becoming too much. Right here. I can't find that thing. But I will find it. When I find it, I will give it to you guys. Any question before we go how to create trading plan? Any question, guys? Any question, guys? Ask your question. Ask your question.
So please go to the chart of FTM.
Why is FTM pulling back? Why is FTM pulling back? Anyway, it will still say. It will still say. So long as price didn't break above what? Remember, I told us that when price breaks above, that means this setup is invalidated. Now the price is still what? Whenever price breaks above moving average is a buy. Huh? Then whenever price is below moving average is a sell. So our price is still within what? It's still below moving average. So I don't have any doubt in mind here. I'm still holding myself.
Have you sold? Okay, so you are trading it.
Yes, now.
Okay.
Look at my entry. My entry peaked now. Look at my entry here.
So you're in profit already?
Yeah.
It was an order you kept or?
Now it's 8%. I'm just 8% in profit. My entry was a bit early.
Okay. It was an order. It was a sell order you kept.
Not a sell order. I entered it during this class now. Immediately I started the class. My first chart was this FTM.
Yes.
So I'm shorting FTM. I'm seeing this breakout here. I see these breakouts. So I have to short FTL. So it's just a quick scalp anyway. Let me just scalp and make some money.
You could do things differently. Today, you can.
So is the screen you're using a laptop or a desktop PC?
I'm using a laptop.
Because
Okay,
it's
look
really
at this.
light.
Look at this buy limit order. But this buy limit order that I have on GMT. I'm looking at price to touch this 61.8. That's 2.97. You can see it's on a support level. It's on a support level. So I'm looking at price to visit there. Then I will long. So for now, I'm still looking at it. So let's continue. How to create a trading plan. How to create a trading plan. You know, without plan, you are bound to fail. This one you will jot this one down. Living God. Number one. Choose your analytical approach. Number one, choose your analytical approach. The analytical approach answers the question, comma. That's, you ask yourself some questions. In quotes, how do you identify trade setups? How do you identify trade setups? Full stop.
Is someone going to put those on the group? Because I'm in darkness. I don't have, what you call it? I don't have lights. So I can't write. Is someone going to put it on the group?
This is a long note. This is a long note. I don't know how to do this now.
I'm just asking someone who's writing, maybe if they can put it on the group, because I can't write. I don't have lights.
Yeah, I'm trying to write. I'll put it in a group.
Thank you so much, my dear. God bless.
So how to create a trading plan? The analytical approach answers the question. How do you identify trade setups? Full stop. That's question mark. It could be a combination of price, support, and resistance. You understand? You know, you analyze identifying your setups. You need to bring some things together, right? You need to bring some technical approach together. Like it could be a combination of price, support, and resistance, trend lines, market structure, chart patterns, fib levels, moving averages, sentiments, or the use of fundamental analysis.
Wait, what? Sentiments?
Yes, sentiment, market sentiments. The use of fundamentals. Just give me 2 minutes, please. All right. Hello. Yeah, so I said it could be a combination of support and resistance, trend lines, market structure, chart patterns, fib levels, moving averages, sentiment, or use of fundamental. You know, fundamental drives the market. It drives the market. Then why technicals is for what? Finding your entry points and exit points. Number 2, select your favorite trade setups. Select your favorite trade setup. You know, most of us here, the mistake we make as a trader is what? Just we chase everything in the market. We chase what? Everything in the market. We forget that 1 or 2 pairs, 1 or 2 coins can feed us on futures for life. 1 or 2, at least maximum 3. You choose your 3 pairs that you'll be focusing on. You'll be doing analysis on. You understand? So select your what? Favorite trade setup. That's number 2. The trade setup is at the core of what? The trading process. Or you can say trade setup is the core of what? Trading process. But first, think of the analytical approach. Think of the analytical approach as the event that triggers what? The trade setup. It's okay. I'm seeing this setup now. It's okay. Market is crashing. What is really making the market as in crashing like this? As BTC is crashing, you know, what is really making the market to crash? It could be sentiments. It could be that there is fear in the market. It could be that there is inflation. It could be that there is a hike in interest rates. You know, all these things, they affect the market. An example of this would be viewing a consolidation pattern. You know, consolidation pattern means what? When market is in consolidation, that means market is ranging. Market is just moving sideways. There is what? There is indecision in the market. You know, buyers are buying, sellers are selling in the market.
Sir.
Yeah.
What are your own favorite coins you have chosen? The 3.
My favorite coins.
Yes.
1, I like Luna. Huh?
Yes, sir.
I like FTM.
FTM.
Yes. Luna, FTM, Ethereum.
So is this FTM against? Are you trading against USDT or USD?
It's USDT. USDT. I've
Okay,
never
sir.
noticed this. USDT. But you know now BTC is bata, so you still need to, whatever happened to BTC will affect other coins. And whenever BTC drops, altcoins will bleed, they will bleed more. Except if the fundamentals surrounding that project, you know, when BTC was pumping, Ape was pumping, right? Now Ape has dumped so much. This coin really dealt with me. This coin really dealt with me, honestly. I wanted to short this coin, but the coin keeps going up. Now at the end of the day, what happened? Stay. I wanted to swing this trade, hold it to $11. Anyway, that's by the way. Look forward to better days. So I said an example of this would be viewing a consolidation pattern in bracket listed in the analytical approach as a chart pattern. Which then gives rise to subsequent action from the trader. You know, when you see a consolidation, what do you expect to do at that time? My people, when you see a consolidation, when price is in a range, what do you expect to happen?
A breakout.
Yeah. So you wait for a breakout. That's the action that you take. You wait for a breakout. For price to break out from that consolidation to give you a clearer what? A clearer structure. So, which gives rise to subsequent action from the trader. That is, the trader will decide to trade the breakout or wait for a pullback or combine breakouts with pullbacks. Only after the chart pattern has successfully played out. So you will do what? You wait for a breakout, just like I was waiting for FTM to break out, and it did. You understand? So price broke out, you know, now pulled back to this point, the place that it broke out from, then is now doing what? Is now dropping.
Please, where your mouse is, take it up straight, sir.
You said?
Take your mouse up straight. I want to ask you if that was a double top.
Where, here?
No, the next.
This place?
Yeah, where, sir?
It looks like a double top, but double top on lower time frame. I don't trust it. I don't trust chart patterns on lower time frame.
Okay, so lower time frame is good. So lower time frame is good job for candle for reading candles.
They make a lot of noise. They make I like using H1, H4, or bigger time frames to locate my chart patterns.
No, okay, sir.
So did you did you get the number 2? Selecting your favorite setup, trade setup.
Yeah.
So should I go to number 3?
Yes.
Number 3. Limit the market you focus on. Limit the market you focus on. You know, if you chase 20 pairs or 20 coins, you will lose focus. You will not know when what is happening on other coins that you've done your analysis on. You will not know. But if you focus on 3 or 2, you will master those coins front and back. You will eat from them front and back. Any move that they make, you already know. So limit the market to focus on. That's if you want to be trading futures. So if you want to be successful, don't chase everything. When starting out, it is important for traders to limit the number of markets in focus. When starting out, it is important for traders to limit the number of markets in focus. No markets, that's full stop. No market is the same. No market is the same. You know, in crypto, sometimes you see BTC will be dropping. ApeCoin will be pumping. You ask yourself, ApeCoin, is it different from, is it a different crypto? Sometimes you will see BTC pumping, GMT will be dumping. You know, you ask yourself a question. You know, no market is the same. And limiting the scope of markets can assist traders. And limiting the scope of markets can assist traders to understand what? To understand the market in question. So when you limit the scope, when you limit your market, the market that you focus on, like 2 or 3, that is on futures. If you want to trade futures, you want to be successful. You know, some people don't trade anything apart from BTC and Ethereum. Some trade only Solana and Luna. You know. So when you limit them, you're able to be successful. You'll be making more gains. So traders can even focus on a specific time frames. You can as well focus on, if you want to be a scalper, just be scalping your thing. If you want to be a day trader, day trading. If you want to be a swing trader, you swing. So traders can even focus on a specific time frames on a single market to familiarize themselves with its characteristics and movements. So that's the essence of what? Limiting the pairs that you trade, limiting the project that you trade. You know, so you'll be familiar, you get yourself familiarized with what? With how that market moves, the movements and the other characteristics. Then number 4. Think about your holding period. Think about your holding period. And how long are you going to hold this thing? How long are you going to, you know, scalpers, you know, they don't spend time in the markets. You know, so you think about your holding period. How long am I going to hold? Time frames will depend on the type of trader. Time frames depend on the type of trader. You know, traders that focus on short-term trades, in bracket, trades open and close on the same day. You open a trade today and you still close it the same day. Includes scalpers and day traders. Includes scalpers and day traders. Full stop. Medium-term traders usually hold trades. That's medium-term. That's medium-term traders usually hold trades. Hello?
Please take the point 4 again.
I said, think about your holding periods. Time frames will depend on the type of trader. Traders that focus on short-term trades, brackets, trades open and close on the same day. That's, you know, if you open a trade and close on the same day, you see that you're a scalper or you're a day trader. Medium-term traders usually hold trades for a few hours up to a few days and are referred to as what? Swing traders. The swing traders are the medium-term traders. But some can hold trade for days.
Sir,
Yeah.
does holding a trade for many days, for a longer period, guarantee longer profit?
Yes.
Okay.
Yeah. Medium-term traders usually hold trades for a few hours up to a few days and are referred to as what? Swing traders. Full stop. Long-term traders or long-term trading involves time frames ranging from a number of days, weeks, and in some cases, years. But there are long-term traders. That's people that are position traders. Long-term trading involves time frames ranging from a number of days, weeks, months. That's that number of days, weeks. They are what? They are higher time frames. In some cases, years. So you can put in brackets. They are called what? Position traders. You can put people that are under this category are called position traders. Then number 5. Know your risk tolerance. Know your risk tolerance. You see? So you have to know the amount of risk that you are willing to throw. Know your risk tolerance. Each step in the trading plan is important. Each step in the trading plan is important. However, if the risk management is missing, if the risk management is missing, the whole plan will fall apart. if the risk management is missing. The whole plan will fall apart. In this step, traders will need to discover their personal risk tolerance, you see. So you know your risk tolerance. In this step, traders will need to discover what? Their personal risk tolerance, which corresponds with how far a trader is willing to set stop loss.
Please repeat that line again.
In this step, traders will need to discover their personal what? Risk tolerance. You know your personal risk tolerance, which corresponds with how far a trader is willing to set stop losses when limiting downside risk. So stop loss is what? Is very, very important if you are trading. If you trade without stop loss, remember that you will be what? You will be liquidated. Your money will just vanish. Number 6. Plan how you will handle adversity. Bracket and success. You know, someone said that after hitting $300,000, he will run away. He won't trade again. My brother, how can you run away from something that is giving you money? Hey. All trades will eventually experience the dreaded what? Downtrend, drawdown. That's all traders will eventually experience dreaded drawdown. You know what I mean by drawdown? Drawdown is when you are holding a trade. Your trade is not going according to plan. Let's say now you are shorting and market is buying for the meantime. You know, that red that you will see at that particular period of time is what? Is a drawdown. All traders will eventually experience dreaded drawdown. So it is important for the trader to set a few rules to follow once this happens in order to manage emotion. So I told you guys that what market is all about 80% psychology. 80% psychology. So one of my students was telling me this morning that she was holding a trade, but due to she wasn't that emotionally balanced, she entered the trade and she was making a lot of mistakes. You know, so it is important for the trader to set a few rules to follow once this happens. In other words, to manage emotion. You know, some people, when their trade is not going, just small drawdown, they'll be panicking. This trade, will it go well? Now let me just close this trade so that it will not eat my money. After closing that trade, you see that what the trade will start going well according to plan. Oh, yeah, come. Are you there?
Yeah.
Yeah, so an effective way to do this is to quantify what? An amount or percentage loss. So an effective way to do this is to quantify an amount or percentage loss that will force the trader to take a step back and evaluate what went wrong. You know, whenever you set your stop loss, you don't need to panic. You don't need to worry yourself, because you've already set what the percentage loss, what you are willing to risk. You've already set what you are willing to risk, so you don't need to panic. It's either you hit that stop loss or you take profit. These are the two things that will happen in the markets. Just like I'm holding FTM now, I've already known where my stop loss is. You understand? So whenever I hit that, I will know that yes, I've taken a loss. No, let me just go with the loss. No emotions attached, because you will not win always. This market is not a place of win-win market. So whenever you take a hit, you go back to the drawing board to see to evaluate what went wrong. So don't fall into traps by setting these figures along the way. So you don't set stop loss along the way. You set your stop loss as you're making your entries. You already know where your stop loss will be. So don't fall into trap of setting these figures along the way. Rather, quantify this upfront. So you have to know this upfront. You have to know your stop loss. You have to know your take profit. So now, what do you do when you are successful? What do you do when your trades are successful? When your trades are successful? You know, confidence is good, but overconfidence can quickly turn winning trades into losing trades. So overconfidence is what? Like greed. When you're supposed to take profit, you say, let me just leave my trade to run more. I will make more money. Before you know it, market will reverse. Market will just reverse and be against you. So confidence is good, but overconfidence can quickly turn winning trades into losing trades. If the market moves favorably, it is not unusual to increase risk / exposure. However, this should be kept to a minimum. So as the market moves favorably, so don't increase your risk. Don't increase your risk. Some people will say, let me add margin. Let me add margin. If you're adding margin, remember you are increasing your risk. So if you add margin, you are increasing what? You are increasing your risk. Number 7. Have a routine for staying on track. Have a routine for staying on track. Traders Traders should set aside time to reflect on the week's events. You have time to evaluate yourself, evaluate your weekly trades. How did I perform this week? How many stop loss did I hit? How many take profits? So traders should set aside time to reflect on the week's events and analyze individual trades. Full stop. It's a good idea to regularly review the trading plan and make tweaks if necessary. So sometimes you review your trading plan, and make some adjustments. Periodical trade review and journaling are excellent way to ensure you are following the process outlined in the trading plan. So you have, when you make profits, you write that, yes, I made profits. This was my entry point. This is the amount that I made today. Tomorrow, if you take loss, you also write. So make a note or save charts relating to successful and unsuccessful trades setup. So make a note or save chart relating to what? Successful and unsuccessful trade setups that can be reviewed later on. So that can be reviewed later on. Trading plans should be rigid to begin with. Trading plans should be rigid to begin with, but should become a little more malleable. But should become a little more malleable as the trader becomes more familiar with the market in focus. The purpose of a trading plan is to give you a strong foundation and boundaries to operate within.
Please, can you take that step again?
I said the purpose of a trading plan is to give you a strong foundation and boundaries to operate within. Full stop. That's my class. So the next teacher will continue. The next teacher will continue. So it's been an eventful. Has been an eventful outcome. So anything that you don't understand, just let me know. Just let me know. All right, guys. Can we call it a day?
Yes.
You can see what FTM is doing. FTM is just trying to, I don't know if it's trying to break people's hearts this night. That's what we've been experiencing on this market. Instead of it to sell, it will go. It will be breaking structures here and there. Invalidating trades. At the end of the day, it will still go the normal way. All right, guys. Good night. The next teacher will continue, Mr. Raf.
Okay, good night.
Have a good night.